if I told you the more intelligent you are, the easier you might be to scam? Sounds wrong, right? We like to believe scams only trap the careless, the uninformed, the desperate. But history tells a very different story. Doctors, engineers, CEOs, experienced investors, smart people. They've all fallen for financial scams, not because they were foolish, but because they were human. Financial scams don't work by attacking intelligence, they work by manipulating psychology, and psychology doesn't care about your IQ. Let's break down how it really happens. The first weapon scammers use is authority. When someone appears powerful, successful, or connected to respected institutions, our brains relax. Authority creates trust shortcuts. If a well-dressed advisor shows impressive returns, polished documents, and confident language, your mind assumes credibility. This is exactly how some of the biggest financial frauds in history operated. They didn't look suspicious, they looked successful. And smart people are trained to respect signals of competence. That's the first trap. The second weapon is social proof. If other intelligent people are investing, it must be safe, right? If your colleagues, friends, or respected community members are already involved, doubt starts to fade. Humans are wired to follow the crowd. When we see others participating, our brain interprets it as validation. Scammers often create fake testimonials, staged investor lists, or early success stories to build momentum. Once momentum builds, even rational minds begin to rationalize risk, and that's where the illusion strengthens. Then comes scarcity and urgency. This opportunity closes tonight. Limited spots available. Act before the market moves. Urgency shuts down deep thinking. When we feel time pressure, we stop analyzing carefully and start reacting emotionally. Smart individuals are often busy. Decision fatigue is real. Under pressure, even analytical people default to instinct, and instinct can be manipulated. Next is overconfidence. This one is dangerous. Highly educated or financially experienced people often believe they can detect fraud. They think they see what others miss, but that confidence becomes a blind spot. Overconfidence reduces skepticism. Instead of asking, what could go wrong, the mind shifts to, I understand this. Scammers know this. They design schemes that feel sophisticated, complex enough to appeal to intelligent investors. Complexity language creates the illusion of legitimacy, but complexity is not the same as safety. Another powerful trigger is emotional storytelling. Scams rarely begin with numbers. They begin with a narrative. A revolutionary technology, a once-in-a-lifetime opportunity, a mission-driven investment that changes the world. Stories activate emotion. Emotion overrides logic, and when emotion leads, logic follows behind, trying to justify the decision. That's how intelligent people convince themselves the risk makes sense. Here's the uncomfortable truth. Scams don't succeed because victims lack intelligence. They succeed because they exploit predictable human patterns: trust, belonging, fear of missing out, desire for growth, confidence in one's own judgment. These are not weaknesses, they're normal human traits, but in the wrong hands, they become entry points. So, how do you protect yourself? Slow down. Real opportunities survive scrutiny. Fraud fears scrutiny. Ask uncomfortable questions. Verify independently. Be suspicious of guaranteed returns. And most importantly, be suspicious of your own certainty. Because the moment you think, I would never fall for that, is the exact moment you're most vulnerable. Financial scams don't target the stupid. They target the confident. They don't break logic. They bypass it. And in the world of money, psychology is often more powerful than intelligence.